mortgage payment was $1,151. After my first year living...
Go back and watch that original video to see her entire story. And it is unfortunate. Some agents might not completely explain it to people. What I always tell people is when I sit down with a buyer consultation, I tell them about their payment. Their payment has 4 parts to it: principal, interest, taxes, insurance. Those first 2 parts, if you get a fixed rate loan, will never change. The interest and the principal goes down over time as you pay it off, but the interest rate won't change, and that part of the payment will always stay the same. What does change is your taxes and insurance, and they usually increase just a little bit. Something I suspect that might have happened in this case is that she saw that $400 increase is actually probably her shortfall for the entire year. Because about 10 months after your purchase of your house, they review your escrow account. And they see how they estimate what your taxes are going to be and what your insurance bill is. And the bank has to have so much escrow in place. They will say, hey, send us an extra $500, or we can raise your payment another $30 per month to cover that shortfall. I always recommend taking that shortfall and splitting it out to new payments versus paying that lump sum amount, because obviously it's a lot smaller to deal with on a monthly basis. Every year they do this, every 12 months, it's about 2 months before your anniversary, and they'll reevaluate your payment. Now, chances are that the increase is going to be very small and a lot smaller than it would be if you were having a rent increase. So think about that when you are buying a house, that yes, your general payment will never change, but your taxes and insurance, they will definitely change over time.